Back to closing trades, and let's talk about some stocks that Kunal is liking at the moment. We spoke about what his take is on Nifty as well as Nifty Bank. But Kunal, what about some stock-specific recommendations for our viewers on the BTST basis?
So there'll be a couple of buy ideas which I'll suggest. Bajaj Auto is something which I'll highlight at current levels. The stock looking attractive, broken past above a triangular pattern on the daily charts, as well as a 9,000 mark. Had given a buy call a couple of days back also. So maintaining that stance on Bajaj Auto, targets revised to 9,350. Stop loss could be traded to 9,000 for traders who are looking at a fresh buy. And the second would be a buy on Uno Minda. That's a chart which is now bouncing back from its 50-day moving average. In fact, on the daily time frame, it's completing a bullish flag formation, breaking past about the 1300 levels. So would suggest a buy with 1350 as a target, stop us at 1294.
Okay, on that note, let's also welcome Nagraj Shetty, Senior Technical Research Analyst at HDFC Securities on the show. Nagraj, hi, good afternoon, and good to be chatting with you today. We've seen very good move coming in across the market today. The market breadth is also looking very good. Amid a market like this, which stocks do you believe still have more value to offer and somewhere we can still see further run-up?
Good afternoon. Thank you for having me in the show. Yes, Nifty has been in a good uptrend in today's session. Overall chart pattern was indicating some strength in the market. We have seen some decent correction from the new all-time highs, and now the 4 days of decline has been almost surpassed within a 1 day of rally. This is phenomenal and indicates the strength of the market. I'm the upper area of the upper hurdle of around 26,300, just a level to surpass the market. I'm expecting Nifty to reach towards 26,500 levels in the near term. On that matter, I have a couple of stocks to discuss. First one is the one that Kunal discussed, Uno Minda. Chartically, Uno Minda has been in a consolidation phase and witnessed upside breakout. The overall chart pattern is indicating a bullish bias. And the hurdle of around 1330, 1340 is likely to be taken out very soon. One can look to buy at current market somewhere around 1320 levels, and 1400 is going to be the target, and one can place a stop loss at 1270. Second one is L&T Finance in holding. L&T Finance has been in a tremendous up move over the last 4 or 5 months. On chartically, we can observe high tops and bottoms, which indicates a strong momentum unfolding in the stock price. After a smaller consolidation, range bound action, it has bounced back very well in today's session, currently trading around 305.40. One can look to buy at this point of time. Immediate target would be around 320, and one can place a stop loss at 295.
Right, interesting. Okay, that's the take coming in on some of the active movers. Just looking at the market texture, while realty, of course, made a decent comeback yesterday, today it seems to be cap goods, metals. They are the ones which are actually making a comeback as we speak right now. Nagraj, anything within cap goods or metals specifically that you like?
Yeah, I have metals, Tata Steel. Tata Steel is the one we have seen some good amount of correction from the higher levels, and today's upside bounce from near 200-day EMA is indicating this stock seems to have formed a higher bottom somewhere around 165 levels recently and bounced back. More upside is likely to come from here onwards. I think the next overhead resistance to be watched around 180, which could be achieved in the next few weeks.
Okay, so that's the take on the metals pack. Kunal, you have Nifty Auto also that has just inched a fresh all-time high for itself. Bajaj Auto, yes, you've shared your view, but the overall auto space, two-wheelers versus four-wheelers, what's looking good right now?
Yeah, I think there are plenty of options over here right now, Sneh, because right now you have names, for example, like Ashok Leyland, which has made a new swing high, crossing very close towards the breakout of the lifetime high levels around the 140, 45, 250 kind of a range for itself. Bajaj Auto is making a comeback. Hero MotoCorp has been one of the few stocks which has come back towards its previous high, 6,200 thereabouts is the previous high for Hero MotoCorp. So maybe a couple of percentage points off from that life high levels. Eicher Motors has been doing phenomenally well. One of the stocks which I've been very bullish on in the last 3-4 months specifically has been Maruti. That's a stock which has done exceptionally well. Initially moved from 11,500 mark to almost 16,800, 17,000 mark, then corrected towards 15,000 levels, and now back again to that 16,000 plus mark. So that's a classical chart which has made a good comeback. So there are plenty of options, and that itself indicates that we are looking at a strong sector rally shaping up. And in a sector uptrend, a 5% to 7% correction is a good enough correction where traders could look at accumulate or buy on dips.
Okay, that's on Nifty Auto. But on that note, time to slip into yet another very short break. We'll be right back and talk more about the markets on the other side.
That on the new listing right now. Having said that, what you're seeing is not any of the new listing, but the old hands really, which are actually holding out well. And capital goods as the theme continues to actually remain buoyant in trade. Nagraj, where within the capital markets theme are you liking or placing any bets today? For instance, Nuvama, Samman Capital, MCX, the tech platform theme is the one which is propping up.
Yeah, rightly said. Capital goods has been in a focus in today's session. We have seen some consolidation, decent downward correction in capital goods sectors, and Siemens is the one what we can observe chartically very interesting pattern building up a larger consolidation of the last few months, and the stock has placed at the verge of decisive upside breakout. So the overall chart pattern is looking positive for the Siemens, and the next overhead resistance to be watched from this side is around 3450.
And within capital markets, Nagaraj, what are your preferred bets?
Yeah, Nuvama is the one where we have seen some good amount of build-up recently. After a consolidation, after a failed downside breakout, it has bounced back very well from lower levels. Chart pattern is steady. 7,500 is a resistance. Once it breaks above around 7,800 to 850 is going to be the next hurdle to be watched.
Nuvama Wealth, that stock is up about 5% as we speak. Kunal, on the flip side, a stock under very mild pressure today is United Breweries, despite the announcement of its new launch, but at a 52-week low for United Breweries. Is that a good time to maybe buy this dip, or is it more of a wait and watch, or maybe stay away from the stock approach right now?
So I think wait and watch. So the entire alcobev space, I think except for maybe Radico, which has done phenomenally well. You look at most of the stocks, and most of these stocks have underperformed. We were discussing this, Sula, UBL, etc. These stocks have been gross underperformers, and trying to take a contra bet over here when there are so many plenty of options available in terms of momentum, in terms of positional picks, turnaround as such, with respect to sectors. I think one needs to just about wait out for a point where these stocks bottom out, because in these kind of scenarios, there have been instances where Sula for the last 2 years has been trading sub its 200 moving averages. Now, how far can the time-wise consolidation happen for a stock like United Breweries, even at current levels? The stock is lower by 10%, 15% than its 200 moving average. But then broadly, I think the time-wise correction is something which could probably be the more painful aspect over here. So that's why I would believe that it's more like a wait and watch and not to initiate for a contra buy.
Okay, so that's the take on United Breweries. Some more stocks that we have been tracking since morning. NCC on the back of an order win, UBL that we just spoke of, Bharti Airtel on the back of its block deal. So those are some stocks that have been in news, and those stocks are still showing some momentum on either side today. On the flip side, if you take look at some big winners in today's trade, Natco Pharma stands out in 11% uptick coming in on Natco Pharma from the Nifty 500 group of stocks. Tata Investment, PG Electroplast, all of these stocks are doing very well. Nagraj, do you have any reading or any coverage on Natco Pharma? 11% uptick. What are you making of the charts today? And maybe if not Natco, what would be your preferred pick from the entire pharma pack?
Yes, Natco is looking very attractive. What we can observe is a rounding bottom type of patterns, and accumulation kind of a pattern was building up recently, and we have seen some upside breakouts in today's session after a small consolidation. The overall chart pattern is developing now. The stock price has just moved above the 200-day EMA, which is significant. Recently, we have seen this stock was hitting the 200-day EMA and coming down from the higher levels, and sustainable move above this 200-day EMA could open a sharp upside for the stock price Natco Pharma in the near term. On that basis, if this sustains about 930, 940 levels, then one can expect the next hurdle to be around 1050, which could be in the next 1 or 2 months.
Okay, so that's on Natco Pharma and pharma space. But let's shift focus and talk about an pharma space. But let's shift focus and talk about an ET Now exclusive, because sources tell ET Now that the government is likely to permit the mergers between insurance and non-insurance companies. Now, what is this going to mean for the players in both of these segments? My colleague Anurag Shah is joining us with more details for a better understanding. Anurag.
So, as Insurance Act Amendment Bill is listed for the winter session, and as per our sources, Cabinet is also likely to consider the insurance bill, and in this bill, the major development or major change will be that the Section 35, which presently restrict merger of insurance companies with non-insurance companies, and as per our sources, this section 35 will be removed. So restriction will be removed, and merger of insurance companies with non-insurance companies will be permitted. So this will pave the way for merger of Axis Max Life with Max Financial Service, which is a holding company. So automatically Axis Max Life will be listed on, will get listed on exchanges. So this will be a major development as far as Max Financial Services is concerned, because the restriction, the Section 35 restriction will be removed, which will pave the way for merger of insurance companies with non-insurance companies. Other than the value-added services clause will also be added, which will allow insurance companies to offer other services other than insurance, like risk mitigation services, risk awareness services will also be allowed. So this will open avenues for insurance companies to do multiple line of businesses, multiple offering. The engagement of insurance company with policy holders will increase. Insurance companies will be able to offer the gyms, certificate gym programs, and many other, the awareness program, the yoga offering, and all these sort of offerings will be allowed by insurance companies. So these, apart from these, we have also discussed about the open architecture, composite license, and 100% FDI, part of Insurance Act Amendment Bill.
That's a very interesting development, and we're of course going to be very closely monitoring what the Insurance Amendment Bill actually entails. But let me welcome on board Anand Tandon as well and find out what he's making of the market right now. Anand, hi, great to have you on the show. Counting down, Anand, to a Nifty all-time peak, hopefully should happen, this time at least, fingers crossed. But having said that, just wanted to understand, what is it that you're making of the earnings gone by, and when a meaningful earnings revival will come in? And do you sense that it could be from Q3 onwards?
I think I would kind of hesitate to say that, though the analyst community is obviously a lot more bullish than I am. The numbers this quarter have been good, but to my mind, some of it is also because of the fact that there was increase in inventory before the tariffs came in from the US. And obviously, we also are now into a season which will carry forward till the next quarter, which includes Diwali, etc. So this quarter numbers will also look good. Whether or not that marks the bottom of the earnings phase decline is something that I think we should wait for a little while before calling it out. Always the analysts start with a 15% growth for the next year, and then it slowly tapers down. And in this year also, we've seen it coming down all the way to a single-digit growth. So I don't see any reason for any significant change next year, unless, of course, things like the tariff imposition from the US, etc., were to go away and a few other things were to turn positive.
Okay, so that's the take on where the overall markets could be headed. Anand, hi, afternoon. Just a while ago, my colleague Anurag was highlighting that there could be a possibility that the mergers between insurance and non-insurance companies could be given the green flag soon. On the back of this, how are you reading into the insurance sector? Because last 6 months, life insurance names that have not done anything at all. So what's your reading over there?
Well, we'll have to see the fine print, but frankly, I don't think it's a great idea. Insurance is a business which requires to be regulated very tightly, and capital requirements have to be very strictly maintained. Unless, if you don't do that for companies which are in the private sector, you run into a serious amount of trouble. also the regulators will be different. If you take, for example, a bank and an insurance company, you would have RBI and IRDA, and it is usually not easy for two regulators to see eye to eye on almost anything. So net, like I said, the proof of the pudding is in the eating. We have to see how it works. Coming to your question on life insurance, I think generally it's not like it will continue. It's a sector which will grow quarter on quarter. There are seasonalities there, but despite that, I think the runways are still fairly deep and wide. And unfortunately, we are still looking at a situation where much of the growth is still coming from ULIPs. So the actual insurance amounts are still fairly meaningless and have a long runway ahead. So from an overall perspective, I think staying with the life insurance company is something I would seriously look at, notwithstanding the kind of underperformance we've seen in the recent past.
Okay, interesting. Let's take a very quick break on that note. And when we come back, we're going to track the last lap of today's trading session. If I were to ask you about discretionary consumption, which are the pockets that you find attractive right now?
Frankly, I'm a little less bullish on domestic consumption than most people are. My argument is very simply structured around the fact that I see a dramatic reduction in overall hiring in the IT sector, which has been one of the largest drivers of domestic consumption. But that said, the one place which will perhaps continue to, for at least the next few quarters, continue to show demand has been the real estate sector. While it has gone up in most cases and prices of housing, etc., have moved quite considerably higher, there still seems to be reasonable demand coming through, and so long as that continues, you can assume that housing and therefore related consumer durables may do reasonably well. The one biggest sector that is obviously benefited both from the reduction in taxes in GST and which can perhaps continue to therefore show some upside is the automobile sector. The cuts have been the highest in that area, and therefore higher end automobiles, especially the SUV market, will probably continue to benefit from that trend.
Right, okay, that's that on discretionary consumption. Nagraj, wanted to get your thoughts in. Tell me, how is it that you're reading on some of the rebound cases like in Asian Paints, for instance, just begun to move?
Yes, Asian Paint has placed at the higher levels, showing consolidation moment. Chartically, it has witnessed the sharp up move from near the 2340, 2350 itself is indicating the momentum back into the stock price. The overall chart pattern is looking kind of a rounding bottom or a accumulation pattern at the lower levels. I think worst seems to be over and the revival is on the back, and the next resistance to be watched is around 3000 to 3100.
Okay, so that's on the H.
You don't want to miss, and the show is coming up at 3:30 today. But just closing down on the market, and we're looking in ship shape. Seems like the momentum has been intact, and hopefully this time we should take to an all-time high. We're already at the 26,200 level for the Nifty. 26,381 for the Nifty futures. It's a solid over 300-point move that you're currently seeing. JSW Steel, Bajaj Finance, Bajaj Finserv, Geo Financials, HDFC Life. This is the entire segment which is actually scaling up. And other than that, of course, there's Interglobe Aviation, Tata Steel, Shriram Finance, there's Tata Motors passenger vehicles, and Reliance, which is holding up a solid 2% as well in trade right now. 1577 is where that stock has climbed at. Axis Bank, Coal India, TechM, and I can just go on with the list of movers today. On the losing side, though, flat for Asian Paints, flat, not much for SBI, and then Aisha Adani Enterprises and Bharti are your laggards today. But Anand, what is it that you're making of? I mean, it's happened earlier as well, wherein promoters have offloaded stake in Bharti. Anything to read too much into it?
Sorry, could you repeat that again?
No, I was talking about Bharti and the block deal, wherein promoters have offloaded nearly about 0.5% into Bharti. Typically, one tries to equate it is with whether this is a profit taking by the promoter. Do you think one should read too much into that?
business itself is doing robustly and will probably continue. Cash flows will come out. Promoter selling is not usually very highly indicative because you could be selling for a variety of reasons, including perhaps, cash that you need for other activities, including promoting other companies. So it's not really a great signal that one should be reacting to. That said, we are seeing many promoters offloading their shares slowly or even selling out companies largely because of the level of the valuations are. In this particular case, the valuations are a little high, but that said, as I mentioned, the capital intensity of the industry is now behind. You are not looking at major capex, and therefore the cash flows will start improving from here on. Overall, I think this industry is fairly well supported now, with only two major players fighting for market share. That too, not so much because they more or less have reached the level of market share that they'd be comfortable with. Net, I think it still remains an integral part of the portfolio.
Bharti, and all eyes have been on that stock ever since the get-go on the back of the block deal that we saw on market open. But Kunal, we were talking with Nagraj about the rebound that we've seen in Asian Paints, but you can also categorize Reliance as a rebound given the recent up move that we've seen. That stock is about 1.5 to 2% higher today, also about 2% higher as we speak. What is the reading now on Reliance, and do you believe that now this up move that we've seen is here to stay?
See, of course, the up move we'll assume it will be at stay for Reliance Industries, but then this was something which was due for the stock. When you're looking at the index coming closer to the lifetime high levels, you can't have almost like a 30% component of your index, 20-25% component of your index, that's Reliance and HDFC Bank, shying away from being closer to the lifetime high levels. So I believe in that context, the stock had to show signs of an outperformance, and I think we've seen a good 2 months for Reliance Industries. The stock has moved from sub 1400 levels to now 1550, 1560 mark where it's trading right now. So I think it's been a good up move. The life high is still due in terms of a breakout for the stock price, but Reliance has been one of the few stocks which is it tends to be a very slow starter in terms of the price trends, but when the breakouts happen, they are very formidable and they are very strong in terms of the sentimental push it gives to the entire market. So I think in that aspect also, the stock is due for a further up move from current levels.
Okay, that's that on Reliance right now and how it's positioned to map Nifty move. Today, of course, you're seeing a little bit of an ease off on an Eicher Motors, Asian Paints, Nykaa, Adani Enterprises. But that can safely be ignored. There's so much of the market which is actually holding out. Eternal as well has bounced back nicely. It's back at this 308 levels. And then, yes, of course, due support from heavyweights like Bajaj Finance, Reliance, and of course, IT has made a solid comeback. Anand, what do you make of the rebound that one has begun to see on IT names?
Well, I think of IT now as the opposite trade for whatever is happening in AI in the US. So when AI does well, IT does badly, and vice versa. Of late, we have started seeing some kind of challenges in terms of valuations that people have been highlighting in terms of AI companies globally. However, I think reading that into India and saying that that will help prospects in India is a little naive in my view. The challenge remains that, with the more and more platforms being able to do basic level of coding, the demand at the lower end for engineers, the type that we supply from India for the bulk of the business, is going to continue to erode. And while you may see an increase in the salary at the higher end, and therefore maybe even a slight increase in margin, I think there are going to be problems in terms of growth, at least for the big players in the industry. That is something that the market has to reconcile with. To some extent, it's been reflected in the prices already, but I wouldn't read too much into the rebound for now. It just simply seems to be a reaction from a sector which is not done anything great in the recent past.
Shifting focus from IT to some of the financial plays once again, Kunal, names like Shriram Finance and L&T Finance continue to be on an uptick, all-time high coming in yet again for both of these stocks today. L&T Finance, you were talking about the kind of run-up that we've seen in the year gone. But what about Shriram Finance? Strong candidate for the Nifty, a recent inclusion in the Nifty, and it has done very well ever since it has been included in the Nifty 50.
Well, yeah, absolutely, yes. And I think up 48% so far on this calendar year for Shriram Finance. And many of the stocks in this space, whether you look at AB Capital, L&T Finance, Shriram Finance, Chola Finance, these stocks have done very well for themselves in the last few weeks, few months. And specifically, I think with the markets gaining confidence on the banking and the financial services index rather as a whole, we've seen these stocks completing classical breakouts for themselves. So there's been a lot of different changes which have happened into the stock prices. The beta of the stock prices have changed over the last 6-7 months. L&T Finance, for example, was erstwhile a very high beta stock. So was the case with the likes of Shriram Finance. But then when the stock comes into a breakout of a life highs on a relative basis also, we see the stock trying to change the beta and being more trending in nature and less volatile. I think we've seen that behavior happening for both of these names, L&T Finance as well as for Shriram Finance, and this indicates that we are looking at a decent uptrend in the longer term basis for these stocks. As of now, the indicators even on the monthly, on the quarterly charts for both of these names are not into an overbought territory for us to expect that these stocks will go into a corrective mode. And since these indicators are not into an overbought territory, we may expect that start of the next calendar year also the price trend would continue to be on the upside for both of these names.
Okay, so that's on some financials like Shriram Finance, L&T Finance that we've been talking about. Anand, what is your view on some of the platform companies? And I am not only restricting this to consumption. Let's talk about something like a Paytm. There's been an ICICI note with the target price hike. That stock is doing well. But also coming back to your traditional platform companies, the Eternal and Swiggy's of the world, what is your reading there?
The Eternal and Swiggy's are obviously competing now again. Swiggy has raised more money, has reduced the platform fees, and is consequently trying to now gain market share. Frankly, without Eternal, without Blinkit, it had kind of saturated where it was, and that business is not doing anything great. Even this business of quick commerce is something that can grow for a little while, but the valuations remain fairly demanding, and you have to believe that this is something that will continue to grow for almost decades before you are able to justify this kind of price. Pricing aside, the business itself is obviously doing reasonably well. Execution is the primary requirement in most of these cases, and there we find that Eternal has done fairly good job of it. Most of the other so-called platform companies, it depends on what is a platform. If the platform is something which allows a winner-takes-all strategy, that is what I would call a platform. Not too many players exist in that kind of space. Most of them, so unlike, for example, Eternal or a Swiggy, where actually you can have a situation where the winner takes all. Even something like an Uber, for example, is not really a platform in the true sense because each market is different. So there aren't that many companies which, in my view, would be called platform companies. Can they continue to grow with large chunks, dollops of cash coming in from investors? Yes. Can they continue to grow without that? That's something that we'll have to wait when the tide moves out.
Right, okay, that's the take coming in right now on, the entire consumption pack. Autos, that's one segment which we've been closely monitoring, and Kunal, we've been discussing this with you as well. Both auto and IT, and tell me, where do you see them positioned next?
So auto, I think, is the most stronger one if you ask me relatively between these two names, and within auto, I think you've seen a cohesive move across many of the stocks within the sector, whether it's the likes of Maruti, M&M, which have been the front runners in terms of price movers, or you come back to two-wheelers and Eicher Motors, Hero MotoCorp, these stocks have done reasonably well. Bajaj Auto is the other stock which I think is due for a comeback. That stock could be due for a breakout over the near term. Looking at the way the charts are poised, the triangular pattern move, a breakout the previous highs, a double bottom of sorts for the stock on the daily, weekly charts for Bajaj Auto. And from the IT pack, we are looking at still the likes of TechM as well as HCL Tech to be one of the top two better performers in the larger cap names. These stocks have done relatively well, have cruised past about their respective 200 moving averages in the last 1 week, 10 days of the price rally for the IT names. From the mid cap end, Persistent has been one stock which is now very close towards its life highs, trading almost at 6,300, 400 levels. Coforge is the other name which has been looking very attractive.
Okay, that's IT and what Kunal has been liking within the IT pack. But Kunal, to push it higher from here, we're just a whisker away literally from that all-time peak. Reliance, of course, is the one which has really chugged along nicely. But in terms of contribution, which stock do you think will sort of hit it out of the park?
Very tough one, Aisha, but I think Reliance should play its part over here. Maybe some part which could come back into the OMC names, HPCL, BPCL, etc. The composition,
but they don't have that much weightage,
the weightage of these stocks is very, very low over there. Financials, I think, as a basket could make a comeback. Even if there's a short covering in the IT names, Infosys, TCS, I think that still holds a good weightage on the overall Nifty IT and the Nifty basket as such. So smaller moves spread across larger cap names, I think itself should do the trick for the index to hit high.
What
Yeah,
about
like is the
HDFC
case today, right? Where you're seeing a very across the board kind
Across
of
the board
move.
kind of a
So
move.
this kind of move will continue as opposed to the very concentrated few pockets moving, which we've been sort of stuck in for the last, I don't know how many months.
Yeah, so that's what I said at the start, Aisha, that for the first time the market breadth is very positive.
Yeah.
When you have 1,500 stocks as a net market breadth, that tells you that the markets are wanting to go into the life highs on a much more positive sentiment mode, and this I believe should have a follow through up move the indices. So and to the overall market. Now it's a matter of getting to a follow through price uptrend mode. The last many times when we've hit that 26,000 mark, come closer to 26,200 mark, it's been more of false starts for the indices, not major market breadth, which has performed very well. But this is the first time where you're seeing confidence being exuded in the net market breadth. So that I believe could be the only change which has happened, and that's why I would believe that maybe we can see a follow through up move, and many of these larger cap and mid cap names, they can see a follow through up move going forward.
And Kunal, contribution towards the all-time high from HDFC Bank. What is your sense on that? Because yes, Reliance is seeing a little bit of a turnaround, but HDFC Bank also has very significant weightage in the index.
But nothing's happening for HDFC Bank on the
Exactly.
chart, and I think anticipating a chart or a breakout over here is a little bit of a futile exercise. In fact, what could probably happen is that if in case the Bank Nifty or the Nifty comes back towards life highs, you might have HDFC Bank being an underperformer on such days, because it has that special quality, where the stock can underperform even on a day when the markets are in a robust price action. So I think that would be the only change which could happen for HDFC Bank, but I don't see the stock moving up into any kind of a major breakout anytime soon.
That's just putting it very politely on how stocks behave. Yeah, but it's a tough one, right? It goes on its own zone, much like Reliance actually.
Yeah, much like Reliance.
Yeah,
but
the market could do whatever it wants. Reliance
Do their
will do
own
what it
thing.
has to.
I mean, you can't imagine Bank Nifty at 59,000 mark or inching towards 60,000. HDFC Bank is still 5%, 4% below its lifetime high levels. And Bank Nifty is broken past about those lifetime high levels by a margin of 10%. So that tells you that HDFC Bank is in its own zone, still not ready for a breakout.
Yeah.
So just by virtue of that, do you believe that now we could see a push on HDFC Bank only because it has not done anything so far?
No. So, Sneh, what happens is these stocks, they require trigger. There has to be some sort of a trigger which could come by, whether it's the expected RBI policy cut or something in terms of an announcement over there. That trigger has to happen for these stocks to start snowballing into an uptrend. Otherwise, it could be just about a one-day breakout for these stocks. Like we've seen so many times in the last many months also, where HDFC Bank has shown that couple of percentage points up move, comes back towards 1,020, 1,040 levels, and then immediately it slips out into a corrective mode. So we don't want to see that happen for HDFC Bank, but for the stock to sustain the uptrend, it requires some kind of a trigger or event to play out.
Okay, so that's on HDFC Bank, and well, we have been trying to see some uptick on that stock, 1.5% higher today, but still quite some time away before it reaches its all-time high, unlike the Nifty Bank, is what Kunal has just told us. Anand, very quickly before we let you go, what do you think could keep the market in this positivity that we've seen today? Because remember, yesterday the monthly Nifty expiry was quite negative for us, but today we seem to have recovered. What could keep this positivity going in the market?
Well, the biggest one is, of course, if, for example, the Ukraine-Russian war goes away, then there is no rationale for Indian tariffs to America to be as high as they are, and therefore that could be the biggest trigger that the market can take. Aside from that, it is mostly a story of earnings, and wherever the earnings will come through is where you should expect to see action. Companies like Reliance can throw some bit of a surprise when they do a demerger, etc., with some of their other businesses or come up with an IPO. And therefore, heavyweights like that could actually move the index up. Otherwise, it is pretty much going to be a year of middling performance in my view.
Okay, so appreciate that take, Kunal and Anand. We'll let you go on that note. Thanks so much for your time today. On that note, let's start winding